Hi there, welcome to Kneppy Invest. Time for another bit of a daily update. And in today's daily update, we're going to look at 2 days. We'll be looking at the Tuesday, the 23rd of May, and also Wednesday, the 24th of May. I'll be looking at least 10 companies that released intriguing or interesting announcements. 5 companies released announcements yesterday, and five, or at least 5 companies, have released interesting announcements today. Now, that was up until the start of trading at 10 a.m. And then I went to do something else, and I haven't looked at what or how the market has reacted to any of these announcements released before trading has begun, and possibly some intriguing announcements have been released after 10 a.m. But first of all, let's go back to yesterday, and we saw maybe 5 announcements being released that I want to feature in today's video. And the first company is a company called 29 Metals. Updated Capricorn Copper 2023 guidance and strategic update. For those who don't know, this is a recent listing on the ASX. They are a mining company that is in production. They do have 2 mines. In fact, I am doing a standalone video on this company in a few weeks. That's the plan anyway. And the main reason I want to do a standalone video in this company is because this company was hit by extreme weather. In fact, significant, unprecedented rainfall just north of their Capricorn mine, which is just north of Mount Isa. They had to close down that mine. So this isn't a structural issue with the company itself, but their financial performance is going to be affected by the closure of this mine. Hence, 29 Metals released this updated Capricorn Copper 2023 guidance. So let's have a look at the strategic update. In fact, I've already opened this up. So Capricorn Copper recovery and Golden Grove outlook. Just talking about copper restarting the mine just north of Mount Isa, impact of extreme weather event and plant recovery. So significant water. There was actually a photo, and the reason I actually know about this company was because of this one photo, which was their mine being completely overtaken by water. And so this is why this has had a pretty big impact on this company. Now, yesterday, there was an initial really good we got rid of Turner's Automotive simply because there's no liquidity in this company. I was going to look at this company, but there's no point. So there was a really interesting initial reaction from this company yesterday on this announcement. So if we look at the 3-minute chart here, yesterday, so this goes back to the start of yesterday, is right here. You can see this little bounce in the share price in the first 30 minutes of trading. In fact, the share price went from $1.05 to $1.15. So we're talking about maybe just shy of a 10% increase in share price in a fairly short period of time. Nice volume as well. And since then, the share price has absolutely nosedived. In fact, the share price has gone from $1.15 to a current share price of 82 cents. Now, this is not real time. So this would be, with the time at 4:12, this would have been 3:52 p.m. So we actually have a look at how the share price is right now. Let's have a look via ComSec. So 82 cents there, 82.5 cents. So not much difference from trading view. Now, the main thing about this is, and the selling really began on open. So the most of yesterday, the share price went sideways. Selling began on open this morning, and a lot of volume as well. You just see this 3-minute volume, not much volume yesterday compared to today. So I'm not sure what happened. No more announcements from the companies. Maybe it's just analysts going through yesterday's announcement. I'm not sure, but this was a very bearish move today. And this is one of the reasons why I don't react to announcements straight away unless I have a really good understanding of the announcement, unless it's a proper upgrade that I am fairly keen on buying a stake in that company. So one of the reasons I am paying close attention to this company is because when they start opening, or when they are going to open the mine and everything goes back to normal, I think this company could be undervalued. Now, of course, this is a mining company, and the financial performance of this company will be highly influenced, affected by the price of copper and gold. So at the moment, this company has a market cap of well less than, I think it's 400 million. But if you look at the daily chart, the share price has been as high as about $3.38, which was in April of 2022. So we are talking about the all-time low in the share price for this company. But it's looking very bearish at the moment, and massive volume. In fact, this could have been almost the highest volume today. Last time we saw volume this high was back in 28th of April of last year. So Really high volume today. I'm not sure what the market has seen. Maybe there's some other news that I haven't looked at yet. So sometimes I'm not across all the news because I go away for 6 hours a day, but something has triggered a lot of selling in this company today. So I'm going to leave this in my watch list just to see how the market reacts to 29 metals the next few days. The next company, or the next two companies I want to look at, are companies that released their half-year results or full-year results for Forex Group, or OFX Group. I used to call them Forex. Well, look at Technology One. Now, Technology One, really good results. Profit, everything up. We'll just have a look at the media announcement. Profit up 24%. That's after and before tax. SaaS annual recurring revenue up 40%. Total revenue up 22%. Total expenses up 21%. So a little bit of scale there. Cash and cash equivalents up 20%. So everything's moving in the right direction for Technology One, but they had to release these sort of results because there is, to take a position in this company, you have to pay a premium. But this is a high quality company on the ASX. That's without doubt one of the highest quality companies on the ASX, and you do have to pay for this company. So let's have a look at the chart for Technology One. There was a muted response in these results. If it was a negative response, if the market didn't like what they see or saw, you would have seen a massive sell-off in this company. The share price did rise about 2.8% and has risen again another 1% today. And share price right now is about all-time high for this company. And if you just take a look at the weekly chart for Technology One, this is the chart for a high quality company. And one of my biggest mistakes was selling Technology One. Yes, I was a shareholder way back in 2014 or 15. I was partaking in this beautiful uptrend in the share price. I decided to be really smart and take profits, full profits, and not keep any holding in this company. That was a big mistake. So I do remember selling when I had more than doubled my money, and I sold at about $3. Share price now $15.88. So mistake I've learned from that, or one thing I've learned from that mistake was maintain holdings in high quality companies. Now, back then, I might not have thought Technology One was a high quality company. My opinion on that has changed. The other thing I learned from that is when you take profits, you don't have to sell all your shares. You can keep a holding in that company. And I do that now. I always, when a company has increased significantly and I want to take a little bit of profits, I won't sell out completely. I will always maintain a holding. Maybe not always, but always maintain a holding, particularly in high quality companies. But in high quality companies, I want to maintain all my holdings, if that makes sense. Beautiful chart, absolutely beautiful. Let's look at the monthly chart. Oh, you have to go, yeah, look at that. Yeah, what a beautiful chart. Oh, should have been showered up through all this period. Anyway, I don't regret stuff like that. If I've learned a lesson, no regrets. Great motto to live by, because a lot of investors, in fact, a lot of people through life can be bogged down by their regrets and can be influenced by their regrets to make more silly mistakes in the future. So no regrets. Just learn from your mistakes in the past, but no regret. The other company was OFX Group. I had a quick look at their results and went, whoa, these look pretty good. Revenue up 44%, underlying net profit up 43%, statutory net profit up 26%, share buyback. So on the 23rd of May, the company announced an on-market share buyback of up to 10% of the company. And the market completely agree with me. Let's have a look today. If share price, I wouldn't be surprised if share price has decreased today. Yeah. So the share price, so I did take a position in this company. In fact, I marked it down on my. So when there was a breakout in OFX Group back in this is May 2021, I took a position. This was just a short to medium term position to ride the trend. So that's when I took a position and I sold up here. I forget exactly when, just to take profits. Not at the top. I did not sell the top. I don't always pick the top, but there was a sort of a double top up here, and the share price was in a downtrend. And then for some reason, the market was expecting bad news from this company, and the complete opposite happened. And I would not say the downtrend has been broken. I like to see the share price go sideways a little bit. $1.78 OFX. Close at $1.60. So down 4.6% today. And it's not surprising because we have seen a lot of shareholders buy into this company over the past year and a half at higher prices. And they have seen the opportunity to sell out of this dog stock because the share price has gone down from when they bought. And I'm not sure that's the right strategy in this case because these results were pretty good. Now, I wouldn't classify OFX Group as a high quality company. That's why I only had a short to medium term position in this company. Just wanted to try to ride the sentiment, the positive sentiment, ride the trend. And now I've put this back onto my watch list. It wasn't on my watch list before because it was in a really good down trend. Now on to BBN, which is Baby Bunting. They must have, I forget what they released. I probably should mention the electro-optic system released, had the AGM, and there was a nice response from the market. But I've talked about a lot about them. Baby Bunting, appointment of managing director and CEO. Now, I'm not sure there was much of reaction from the market, so I'm not even sure why I put this onto my list. In fact, share price down 5% today and down a little bit yesterday. So I'm not even sure why I put this on my list, but no reason, in my opinion, unless you think this is a high quality company, to even think about buying a position in this because the share price is in a downtrend. And every time you see a little bit of a rally fails and doesn't succeed in rising share price for the long term. So I have this on my watch list because I want to see a nice period of consolidation. I want to see the share price no longer in a downtrend because who knows how much further the share price has to fall for this company. Now, another company that had, I'll just put it in here, BRN, I think they had the AGM as well, Brainchip. So AGM results, blah, blah, presentation at 10:39 a.m., annual general meeting results, 3:37 p.m. Unfortunately, there must have been something in there the market didn't like because the share price absolutely tanked yesterday. Now, in fairness to Brainchip, the share price went on a two-day rally the previous 2 days, up 9%, up 8.5%, and then dropped 17.7% on the Tuesday. So even though it was a big drop in the share price, it was just mirroring the 2-day rally in the share price. So share price, the shares of Brainchip still in the downtrend. No insight to this company dropping. What's the market cap now? Still 890 million. Company doesn't have any. I used to be a shareholder of this company because of the potential, small potential of success. And then I just didn't like the execution. I thought the execution was going to be a lot longer than I think what the market was expecting. And the share price is now in the downtrend. I think the market is getting a little bit tired of management of this company because at this point in time, I just think it's going to be a while before this company sees any success. I'm talking about a few years from now, at least a few years. And I think the share price has a lot more to fall potentially from here. I'd like to see some positive news from this company. Really haven't seen any positive news. Today, they released a new US patent that won't have any that won't get any reaction from the market whatsoever. And the other one was WSR, Weststar Resources, down 19.5%. That's not the reason why I want to look at that company. So yesterday they had an ASX price and volume query. If you look at their trade history, this has been a very volatile ride for shareholders. So on the 15th of May, up 53%, 16th of May, down 27%, and then not much action the next 3 days. But then on the Monday this week, up 35%, then the Tuesday, up 54%. I'm pretty sure there's no news, yet no news. In fact, the market wanted to know why was the share price rallying, and then it's fallen away today. This is a plaything of day traders right now. Maybe I've featured this, not featured, but I did mention this company in a video before. But look at that, massive volume, a lot of volatility, just a plaything for traders or day traders right now. No interest in this company at all, but it's just interesting how much volatility there is in this company. So that's all the companies yesterday I wanted to look at. Now let's have a look at today. So this is all going to be fresh for me. Time is now 4:23 p.m. Really should get a move on. I can ramble on a little bit. Anyway, let's have a look. So the first company I want to look at is the first company that released an announcement today, and that's Eroad. I'm not going to look at Oceania Healthcare. Let's have a look. Although the share price is up 7.9%. I don't really follow this company at much, but that's a nice reaction. So maybe have a look at Oceania Healthcare just because the reaction from the market was quite positive. Market cap 503 million, although most of that action, maybe one of the reasons I don't follow this company is lack of liquidity. You can see liquidity just by looking at a chart. So more liquidity than TRA. So TRA was another company that released their results yesterday, but when you look at the chart, there's nothing, hardly any trading. In fact, I looked at their trade history and There was no trades in this company at all last September. The liquidity is starting to improve a little bit. So in April, we've seen shares in this company traded 5 days. So that beats 0 days in September last year. But Oceania, yeah, no interest in that company, but nice reaction from the market. Eroad is the interesting one. A financial year 23 results delivered in line with guidance. Now, my big problem with this company is they have significant revenue but aren't profitable. In fact, they're not only are they not profitable, they burned through something like $30 million of cash. We're talking about free cash flow in the last financial year. And the main question I have, you're generating $160 million of revenue. How can you not be profitable? And some people have mentioned it's all about land grab. You're trying to get as many customers as quick as possible. That's why they have to spend money. But this sort of business model is not working right now. May have been working 2 or 3 years ago, but it's not working now. And Eroad is a perfect example of that. So maybe they had some positive news in this. I try to remember. I did go through this very quickly, but let's have a look at the market reaction. Only up 0.9%. So let's have a look to see if there was a positive reaction through the day. And there was, yeah. So you can just see this 1 day candlestick. It's red, the body is fairly long. So the share price actually opened at 64 cents and closed at 54 cents. So again, it's the retail investors who saw this announcement, got too excited, too quickly, impatient, bought on open or near open, and the share price dropped during the day. In fact, the share price dropped about 10%, just over 10% during the day because there were some selling. And why was it selling? Just look at the chart. There would have been some shareholders who saw it pop up to 64 cents and went, oh, I can sell out of my shares now. Look at that. This is an ugly looking chart. A very typical chart on the ASX right now, particularly with these unprofitable tech companies. This is New Zealand-based company. Again, normalized revenue, 165.3 million, above their guidance. Ooh, even improved from a loss to a profit, but free cash flow improved from outflow of $45 million to an outflow of 29.9 million. And that's the thing I would be worrying about, that amount of cash burn in this company. They have to correct that. In fact, what's the market cap of this company now? Let's have a look. Eroad. Could look at that. So Eroad, $60 million. Look, I might put this on my radar just because the amount of revenue, and if management decide, well, we need to cut down our costs, become profitable and free cash flow positive. I think they did mention becoming free cash flow positive in financial year 26. Or maybe it was 25, but it's still 2 or 3 years away. They need to become free cash flow positive before then, or this company could suffer a fair bit, unless they have a lot of cash on hand. But I haven't looked that closely into this company. Sky City investor presentation, including updated trading guidance. So whenever I see the words trading guidance or updated trading guidance, profit upgrade, profit downgrade, I'm always going to look at that announcement. So this is a casino company. Mostly they have the casinos in New Zealand. I think they have one in Adelaide, one elsewhere as well. But this is largely a New Zealand-based company. And you can tell that because the time they released the announcement was 7:32 a.m. So Oceania Healthcare is New Zealand, Eroad's New Zealand. New Zealand-based companies will release their announcements first on the ASX. So let's have a look to see the reaction from the market. Oh, let's have a look. Whoops, that wasn't supposed to happen. Yeah, that's the thing. You can't, when you're looking at the announcements in ComSec, you can't click on the company. Always happens. So you have to hover your mouse over it. You can't click on it. So Sky City down 4% today. And you can just see, in fact, when you hover your mouse on it, you can just see the daily chart, not the daily chart, but the chart just for today. And you can just see the share price during the day fell. And there was consistent selling during the day. So down 4%, there's no need for me to look at this announcement. I would say, without even looking at Sky City's chart, it's not looking good yet. Sky City's chart in the downtrend because of their casino. Casinos aren't in favor right now. If we look at the weekly chart, yeah, even the weekly chart, it's gone from a high of $4.80 in 2016 to $2.20. This is not the sort of company you want to own for the long term, but you can see periods where the share price goes up. Share price in a downtrend in 2008, 2010, in a nice uptrend between 2011 and 16, and down all the way back to the lows we saw back during the GFC. So not the sort of high quality company I am looking for to have my portfolio for the long term. So we'll go past Sky. I was going to say Skin City or Sin City, but what's it called? Sky City. The next company is Findi Limited. This is really interesting because they own ATMs in India. And when you look at their guidance, it looks really intriguing for a company with a market cap of about $16 million. So they are guiding, I think this is financial year 24. So their financial year 24 guidance is revenue of 67.3 million, EBITDA of 23.6 million, profit after tax of $4 million. They also mentioned, I believe here, they are pleased to announce a dividend policy under which it will determine a 6-monthly dividend. So they haven't announced a dividend, but they are just going to announce a dividend policy. Anyway, so the other thing about this company is they do have a lot of debt. So you've got to take that debt into account. So even though the market cap is something like $18 million, you have to add that debt onto the market cap to give a true valuation of this company. But let's have a look to see the market reaction. 7.6%. It's not, and that's not surprising. There was a surprising down. I was going to say down selling. There was a surprising. Have a look at the daily chart for this. There was a surprising down day on the 17th of May, so 1 week ago. Share price fell 14.6% on no news, on not much volume. This was just maybe some tired shareholders just selling, on market. And if you sell on market for illiquid companies, this is not that illiquid, but still liquid enough that if someone sells on market, shares will drop like this, so 14.6% on one trade. And they haven't recovered since then. So an interesting company in terms of this company is profitable. Interesting space, ATMs in India. I'm not sure about that. But still, just the potential value in this company, particularly if they do announce a dividend. And one of the other things I want to see is why there's a massive difference between the EBITDA and the profit. So remember, EBITDA was 24 million, profit 3 million or 4 million. Massive difference. So is it depreciation, amortization? Has to be one of those. And if it's amortization, I think they're really underselling the quality of their earnings or the quality of their profit. That's just me. Yeah, perhaps. Findi, next one is, looks like it's Webjet. Or Bezra. I've been following Bezra closely because share price has gone wild the last few months. Bezra down 6% on the environmental impact assessment approved. Rent.com.au trading update on RentPay platform. Share price up 16.7. I might have to have a look at that later. So Webjet released their full-year results. Share price has been a beautiful uptrend. Look, Weststar Resources, the company I was talking about yesterday. Shortfall oversubscribed ahead of increased expiration. Webjet, 3.8. So these must have been, the market must have liked these results. You look at their chart, there will be some people saying, well, beautiful uptrend. I have to admit that. But when you look at the long-term chart, you say, oh, the share price still has a long way to go before it reaches pre-COVID levels up to $12.50. But remember, this company did a massive capital raising in March 2020, more than double the shares on issue. So if you double the share price right now, you get to about $14 and $15, in fact, which means the valuation or the market cap of this company is at a record high. So you can't look at the share price or compare share prices pre-COVID to now and think, wow, share price is much lower than then, and this must be cheaper and must have share price has a way to go to get back to up to those levels. You have to compare market cap then to market cap now. But in saying all that, the chart of this company is in a beautiful uptrend, and the catalyst for this uptrend was on the 17th of November. Share price increased 10% on the day, got to a resistance level, and it took about 6 days to get above that resistance level. It actually came back and tested it. You can see it broke it through here, came back and tested it, and there was not enough selling to drive it down. In fact, there was very low volume, which was why you see these testings of these levels. The market wants to see if there's any selling, and there was no selling, and the share price just took off. Technical analysis works if you know what you're looking at, and if you understand why the share price of a company like Webjet did what it did back in November, December last year. It's all about psychology and sentiment. There was a shift in sentiment, probably the AGM or something like that. I don't know. but something happened on 17th of November. So that's Webjet. And the last company, Trajan, 2.3. Now, last Plenty Group preliminary final report, 11.7%. I have to have a look at that. I'll write that down. I don't. I looked at it very quickly, but they're not profitable. They are a lender, that sort of thing. That sort of company is not in favour. Carbon Revolution secures $60 million loan, up 40%. Oh, got to put that in. No, I'm not really interested in that company. Oh, Universal Store Holdings. That's the other one. Trading update and guidance. Now, I had a look at this. I have cheated because I did look at the share price performance of this company, because I was actually interested to see how the market was going to react to this. On the surface, this trading update and guidance looked positive, but I was not sure if they had released previous guidance. I went to back to the half-year results in February. They had released no guidance, which means there's nothing to compare this trading update to. It's not a trading upgrade, not a trading downgrade. This is their first guidance for the year, and it did on the surface look fairly positive. 258 to $261 million in sales, up from last year. Gross margins expected to moderately exceed 61.1%, which they delivered in financial year 22. Underlying EBIT to be between 39 and 41 million, which compares to 32.6 million in financial year 22. And they talk about store footprint. So I thought maybe the share price would increase for this company, and it did the complete opposite, down 23.9%. So this is, again, a reason why I like to wait to see the market reaction, because I was wrong with this. I thought maybe share price might increase. Now, the market, unlike OFX Group, which I think the market got wrong, the market got this one right. It did look like the share price wanted to get an uptrend at the end of last year into the start of this year. You can just see the share price trying to increase up until March. And then the share price went into a downtrend. And I was wondering why the market was selling off on Universal Store Holdings. Because the whole thesis behind this company is, even though there are retail and clothing, that sort of thing, they are primarily targeting teenagers. And teenagers don't have mortgages. Well, most of them don't have mortgages. So they won't be quite as affected by the rising interest rate environment as, say, other retail companies. That was the thinking behind this company. In fact, Motley Fool, the free Motley Fool article things, and the only reason I know this is because it popped up onto my phone today. I saw yesterday someone released an article saying these are the 3 retail stores I'd buy: Universal Store Holdings, and there was another one. I think it was Lavisa. I understand Lavisa, that is a much higher quality company than this. But the market didn't get this wrong, but the thesis was wrong based off the market reaction today. It's fallen through a support level, which was about $3.40. A little bit of buying during the day, massive volume as well. Have to have a look at this massive volume. Must have been a fund manager who was selling out on these or this trading update. So a very negative reaction from the market. Possible value down 23.9%. I will always look at companies like this to see if there is possible value, because I thought maybe there was good value back when the share price was, say, $5 or so. So market cap now, this is probably wrong. I'm not sure if TradingView updates market cap during the day. I know that Market Index does. Yeah, so TradingView has a market cap of 322 million. Market Index has a market cap of 242 million. And so I will have a look at this company just to see if there is possible value. Not only that, this could be a share price low. Yeah, all-time share price low. Share price has been as high as $8.60. So interesting times ahead for this company. I wouldn't be surprised to see some value investors coming out and being interested in this company. And that's what might have happened today. Share price was actually at one point in time less than $3. So let's have a look at the daily chart. So share price at one point in time got down as low as $2.91. So there was a bit of buying today. So that's all the announcements that were released before 10 a.m. Now let's have a look at the announcements released after 10 a.m. Again, I'm rambling on, it seems like. I did not see this Play Science Studios. I'll have a look at that. Sometimes I will miss announcements. So I probably would have been interested in that announcement from Play Science Studios, publishing signs, first game title. Market did like it, up 7.3%. So I'm just going quickly through this. Zeus Resources. There are some great names on the ASX. Zeus Resources. There's another one called Metallica. I wonder if they're a fan of Metallica. Thorn Group, Strategic Investment, up 5.1%. Now we're getting to 10 a.m. Rhythm Biosciences, still down, keeps going down. Okay. Telix Pharmaceuticals, I'm going to have a look at that. I am a shareholder of Telix Pharmaceuticals, had the AGM today. Share price down. Well, that's okay because the share price has been on a massive run lately. Let's have a look at Telix share price or chart, I mean. Look at that. Beautiful, beautiful run. And to see it down day like this is understandable. We've seen a few in the past few weeks. So nothing to be concerned about if you're, unless you want to take profits. Really understandable taking profits in that company at this point in time. Board changes, nothing nothing else. So that's all the announcements today. Again, most of the announcements that are relevant for me, that are interesting, were released before 10 a.m. And that's usually the way it is. On occasion, you will see some announcements released between 10 a.m. and close, well, not close of trading, until close of announcements, which is something like 7 p.m., something like that. Now let's have a look. The best performing companies on today's chart. Carbon Revolution. I might just refresh this. Nope, Carbon Revolution has been taken over by Rubik's Resources, up 50%. Now, sometimes if I don't know, I can't remember if a company has released an announcement, you can just go to their site on Market Index, and this company has released an acquisition of a ceiling lithium project, another lithium company on the ASX. It's just ridiculous. There's way too many. K2 Fly, I'm just looking for any interesting names within this list. Really clean space, market cap of $22.3 million. Have a look at this chart. If you haven't been following this company at all, I've been following this company ever since they listed on the ASX. It was just an opportune listing. So they have face masks or something. I forget what they actually do. But they listed towards the end of 2020. Share price as high as $7.50. It's fallen to $7.50 to 29 cents because those tailwinds back in late 2020 came to an end pretty abruptly. But I will look for a turnaround in this company. But share price continually going down. And this bounce today was just bouncing off the all-time lows. No interest in that company just yet. Not even sure there's any value in that company just yet. Otherwise, most of the best performers are low or small cap companies. I haven't seen no companies above 100 million. First 100 million company that performed well today was Clarity Pharmaceuticals, up 11%. Then we had Paragon Care, up 10.8%. But otherwise, they're all small. AFP, or AFT Pharmaceuticals. I did mention this company in last week's video because they released their results last week, but very liquidly traded. So maybe there was like 2 shares traded today. Yep, no, it was more than that. There was actually 1, 2, 3, 4, 5 trades today, but that did push up the share price 8.5%. So one person maybe liked the results they released the other day, but I wouldn't get too carried away with the share price increasing 8.5% on a company that is illiquidly traded. Now let's have a look at the worst performing companies. It might be a fair few because I think the market was down. So all tech down 0.9%, resources down 1.3%. Universal Store, 4th worst performing company on the ASX. Another company I mentioned in this video, Weststar Resources, the 5th worst performing company. And 29 Metals, another company I mentioned in this video, was the 6th worst performing company. So the 4th, 5th, and 6th, all mentioned in today's video. Still not sure why 29 Metals was beaten down today. Must be some reason behind that, which I'll have a look at. Otherwise, Cettire down 10.1%, down below $2. $2 is a very important support or resistance level for this company. It looked like it had succeeded in breaking that level, but look at that. It's fallen back below. So maybe this was sort of maybe now's the time to buy, $1.96. If we see the share price get above $2 again, maybe this was just a test of this support level. Now it's possibly support. And if it remains below $2, that would be fairly negative. Maybe not fairly negative, but this level has not been broken, the support level or resistance level. And that could be it for today. Accent Group down 8.5% today. This could be just a reaction from the market in terms of universal, whatever it's called. I was going to say universal healthcare. Universal Group. I don't think this company will. Yep, no announcements released. This just could be, what's the word when something is affected by something in close proximity, and people are just thinking, well, Universal, whatever that company's called, has been negatively affected. Retail's down or something like this, and there's been a little bit of sell-off in this company, high volume as well. So share price of this company has really nosedived recently. Was in a beautiful uptrend. Possibly this uptrend is coming to an end, just because really negative sentiment has been driving share price down from about $2.60 all the way down to $2.04. So that's interesting. And that's probably the last, just almost missed that one. And I don't think there's anything else here. And we're getting to the bottom of the list. The Visa down 6.9%. Again, probably because of what happened. I am a low Visa shareholder, probably because of what happened with Universal. So that's really all I have all for today's video. Went way over schedule. I wanted this to be like 20 minutes, but I tend to ramble on a little bit. Otherwise, if you do have any questions about any companies I featured in today's video or any thoughts, if you're a Universal shareholder, I'd love to hear your opinion on the company's performance and what's happened today with the share price. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.